Hi all, welcome to the wonderful session of fundamental analysis of stocks and how to do a value investing. This is a very brief introduction for all the beginners or all for the stock market investing. So again, I welcome to all my Make You Billionaire Telegram YouTube channel and to my Telegram channel too. So today we are going to discuss to find a good quality multi-bagger stocks and what are the parameters we have to consider before we invest into a particular stock. And today we will see some Warren Buffett style of investing. What are the parameters of Warren Buffett considered before they invested based on the quarterly results or yearly results? We'll analyze those two. So before we start, just I want to give an update. If you are watching for my first time my YouTube channel, it is a kind request. Please subscribe my YouTube channel and press the bell icon, because we are going to give a lot of value investing videos to you, which will be a lot of helpful for understanding what are the best value stocks and how to identify the stocks and how to be early invest in particular stocks for the quick gains. So let us not waste time and let us start it. And those who are not joined my Telegram channel, it is a kind request, join my Telegram channel, Make You Billionaire Telegram channel, where I am giving a lot of free information about value investing and value investing, good stocks, where to invest, what is the target profit, everything I am giving a lot of information here. Again, my Telegram channel name is Make You Billionaire Telegram channel. Please join. And let us start, actually not wasting our time. So before we start into our analysis, I just want to give an introduction that I am going to use screener.in, a free online fundamental analysis website. It has as I told you, it is a free website. It has a tons and tons of financial information are there. The early days are gone, going to the bookish knowledge or understanding the paper, understanding all the financials. That level of information is over. Now everything is available online, so we can reach into a quick decision about that. So in this brief video, let us start thinking that I want to invest quality IT stocks, because I see that there will be some potential in the IT stocks. I'm just giving an example. I'm just purely giving some kind of a hypothetical example, thinking that IT is going to be evolved, it is going to stay here maybe a lot of time. So I think actually some IT stocks I'm just trying to take it to invest into an IT stock. So if I want to understand about what type of IT stocks or which IT stocks or what parameters I have to consider, in the screener.in, I just went here. I just have a company search. One dialog box is I just type here one company name called Infosys or Infi, which is listed in the NSE and BSE here. So here brief introduction about the company, what this company is doing or what is the nature of the business, it is written here. So if we come here a little bit lower here, it clearly told about the market capitalization of this company, 2,77 crores approximately, and book value, return of equity, and stock PE. PE means what is the value price to earning of this particular company. If we invest something, actually what is their value. So we will discuss the importance about this PE, because PE value is very, very important before we invest into any stocks. We will come to this little late to understanding more about this one. And what is the current market price of this particular stock? Is it a dividend paying company, or how much they are giving last time? And what is the sales growth? Because sales growth is also very important. We need to understand gradually over the last 5 years or 6 years whether the sales are increasing or profit is increasing, their but I can say liabilities are decreasing. Everything we have to see. We will see a little bit later, but let us understand at this moment what is their sales growth as of now is 9.85%. And this is purely a technical chart with respect to price to earning. We will discuss this later, because this technical chart is helpful for us actually when to invest this particular stocks if we decided to invest this. Because if you see last 20 years or 30 years, every year Nifty falls like 4 times in a year, like 5% or 6% of the Nifty falls every time, every year. Okay, so if you're planning to invest in particular stocks, actually during those times we will invest it. We know what we identify what is the good fundamental stocks based on a lot of parameters, or which we are going to discuss now, and we will wait for those 4 times in a year opportunity to invest here for a quick 30% to 40% gains. Again, during that 4 times in a year, as I told you that Nifty is going to be down actually as per the last 20 years data. On that time, the fear will be very high in the market. For I can say that the economy will be some issues will be there, global economy or some other economy or COVID related issues, or Indian economy, or some kind of terror issues, or bomb blast, or some kind of so some other issues will be there in the market. There will be a lot of fear will be there. On that time, we will invest in fundamentally good stocks, which on that time the stocks will be like a 15%, 16% might be down, or more than 10% it will be literally down. So those opportunities we have to use for investing this one. Okay, I'm just giving a technical or my experience actually how we have to invest. So let us go to understand quickly about what is the pros and cons of this company. The positive factor of the company is virtually debt free, which is a very good sign. And the company is paying a healthy dividend pay of 54.56%. It is absolutely stunning about this dividend paying company. And if you see some of the negative qualities, they are saying actually they has delivered a poor growth of 11.25% over the past 5 years, and promoter holding is like 3.15%. So these are the two called the negatives about as per the screener they are giving these two things. We need to understand which promoter is selling this one and what is the reason behind this. Is it whether it's going to start a new business, or is it thinking that the value of the company is diminishing? So a lot of news are coming about this company in the paper, right? We can get a lot of information about this particular details. And this is the peer comparison of this particular company. There are a lot of peers and competitions are there. Healthy competition makes a very good company. So there are competitions or competitors or a peer of this company is TCS, HCL, Wipro, Tech Mahindra, Oracle, and Emphasis. And as I told you, the PE, price to earning, always look for this PE, or the lower the PE value when compared to the competitors, the best it is. I repeat, we need to identify the lower PE which respect to the current industry PE. Okay, for example, the industry average PE, if you take this one, actually you will get some number. If it is below that particular PE, your company going to invest, that company is good with respect to other parameters if it is getting satisfied. So TCS having 21.99 or 22 is the PE. HCL is a little bit cheap, or Wipro is a little bit cheap based on their market capitalization and other parameters too. So a lot of things are here. So identify which is a cheap one here based on different factors or different parameters which we are going to discuss, and identify and keep it with you for the investing. And if there is a one column called edit columns here. In the edit columns, if we click here, there are a lot of information about this particular thing. There are lots. Sales details or historical, like if you see here, sales growth, profit growth, returns of the year, or free cash flow, how much is there. Historically, all data for the last 5 to 7 to 10 years data will be there, and preceding number of equity shares preceding year, free cash flow, sales preceding year, every information is there. This is a recent data, price to book value, dividend, how much they are given, return on assets, a lot of things are there. So here I want to mention 2-3 important factors here. The debt is a very important factor, promoter holding is a very important factor, the industry PE is a very important factor. We need to understand what is the industry PE. If it is below that particular value, our company PE, we can consider for investing. And if you see here some of the good things which I understand, reserves, or how much depreciation, secured loan, unsecured, whether company having any loans are there or unsecured loans are there, which has a positive or negative effects on the particular company, right? And what are the current assets or liabilities of the particular company. So lots and tons of information are here. We will discuss this one later because this is very, very valuable information. We will discuss all these parameters later, because once we click this one, this column will be added in the previous page which we see. I just show you. So previously, if you here, it will be get added on here. So it will be added on here. So it will be very measured to easily understand about various using various parameters too. So let us go to the quarterly returns of this particular Infosys here. So it gives like a sales. It gives from 2017 to 2020. Last 3 years or a lot of quarters information are there. You can see how much expenses they are coming here, how much sales is increasing or not, or what are the other incomes the company is getting, what is the interest or what is the depreciation, and how much profit the company is getting on quarterly basis is increasing. The good companies should always shows that increasing profit have to show in the graph, and what is the EPS, is it increasing or decreasing, we can measure here. And if we come here, profit and loss statement of this Infosys, these are the important parameters: sales, expense, other income, interest, depreciation, profit before tax, net profit, or dividend, how much pay. So quickly, as I told you about, if you see last 5 years, we have to measure for understanding a quality company and a stability company. Is it increasing or decreasing the particular sales? What are the expenses they are coming, or what are other income companies generating? Is it increasing or decreasing? lots and lot of information. With paying dividend paying companies here or not, everything you will get a lot of information here. And finally, if we come here, a little bit more details about the balance sheet. This is very important for the last I can say 10 years or 15 years. Informations are here from 2009 to 2020. Informations are there. How much, what is the share capital, how much is increasing or decreasing, what is the reserves that company is having, and what is the liabilities the company having. This is reducing or increasing. That we have to understand how it is increasing or why it is increasing. Because if you see here last 2 years, 2018 2019, I seen a good improvement in the liabilities. Did you see that? Previously, if you see here from to here, it is almost in a range like 13 to 15,000 or 15 crores, or that particular range is coming. But if you see here 15 to 23, it is a huge jump liabilities. So we need to understand about this, why these liabilities are coming. So fixed assets, how much fixed assets the company is, it increasing or decreasing, or how much is increasing? If you see fixed assets, it is like almost, if you see from here to here, last 2015 to 2018, it is like 11,000 to like a 14,000 range is there. But if we here last year, there is a big wave or like big changes, right? 12,000, 15,000 or 23,000. This is a good, fixed asset is good actually. But why this much big rapid changes are coming? That because fixed asset and liabilities also, if you see here, a big changes when compared to previous one. So we need to understand this. And about the investments in the company's various investments, how much this year they made a very less investments, or gradually if you see here, they made a pretty last 3 years like 2017 to 2019, they are investing in a lot of good areas. So this is the other assets details. Overall, this is like a total assets information after minusing liabilities and other details. Is it the company is increasing or decreasing, or how much percentage is increasing, everything you can measure here. And finally, about the cash flows, operating activity, investing, a lot of things we can understand. And finally here also the ratio which we'll understand. So coming back to here, some of the parameters I am telling very briefly about this video is that the return of equity we have to understand, the return of capital employed, book value, or the stock PE, or is it a dividend paying company, or is it a virtually debt free company, or the debts are gradually reducing or not, and what is the growth factor of this actually, and whether they have any loans for the company, how much promoters are increasing, is it the promoters are decreasing or the promoters are decreasing their shareholding patterns. So based on this very brief idea, we will come to know about that, whether this company is in a good form or a bad form. So based on that, you identify one particular stock, and finally we have to invest this particular stocks. So I have given one personal recommendation to you. Every year, if you look at the last 4 years or 6 years, every year the company, the Nifty or a Sensex or our index has fallen like more than 5% or 6% every year 4 times. So during those times actually, if we identify very good quality stocks actually, we can invest it. Sometimes you may hear that actually a company CEO is resigning and no CEO is company. There might be a lot of fluctuations in the market. Okay, so don't go for that kind of selling or buying kind of, because if a company CEO is going and if the value of the company is still intact, so there's no problem with it. Don't need to go and panic and sell it. Every company, if a CEO company or director coming or some other VP, new person going, resigning and all, there might be some intraday, some moments will be there in the stocks actually, which you don't have to consider as a value investor. Because as a value investor, you have to see actually whether my company value is protected or not, whether the business is intact or not actually, or is there any news coming which is impacting their businesses, or whether their reputation is going down. Those are the parameters which we have to look at for the our exit or a lot of other detailed decision making process we have to take it. Otherwise, a company CEO is changing, company new CEO is coming, those things and all, maybe then the Nifty will fall a little bit more or something less. Don't consider that. You keep on investing during this 4 times in a year where the Nifty or the Sensex falls like more than 6%. Because during that time the fear of the market will be very high, and you can see here the value of this particular stock is very good actually. During those times, this stocks will be 10% or 12% might be fall actually, but just look at that on that particular opportunity and invest it. You can get very good returns during this 4 times very quickly. I personally seen like a 60 to 70% returns per annum. You can get it if you use this particular technique. Anyway, thanks again watching my video. If you are watching again first time a YouTube video, please subscribe it, because I am going to detail about more details about this fundamental analysis, and I am going to explain how to do a value investing a little bit more deeper. And also I am going to give a lot of information about in my Telegram channel, so please join in my Telegram channel, Make You Billionaire. See you in the next video. Have a nice day.